trend. Even former President Trump has spent the last 3 days blasting Bitcoin. Today on Stuart Varney, number 45, said this.
The currency of this world should be the dollar. And I don't think we should have all of the Bitcoins of the world out there. I think they should regulate them very, very high. Bitcoin, it just seems like a scam. I don't like it because it's another currency competing against the dollar. Essentially, it's a currency competing against the dollar. I want the dollar to be the currency of the
FUD, and more FUD. Now President Trump says that Bitcoin is a scam and should be regulated heavily. At the same time, the FBI claimed that they seized some of the Bitcoin paid to the Russian gas line hackers. So it's FUD, and more FUD. And today I'm going to show you why I think that all this FUD put together is actually the equivalent of a black swan event for Bitcoin. And if it is a black swan event for Bitcoin, I'm going to show you why today may be the bottom. And I'm looking at a model that you guys all need to see. So big show today. And guys, remember, if you are feeling a little bit crypto depressed, a little bit crypto despondent, it's not you. It's all of us. And we're going to address that right here today. Welcome back, guys. I'm Crypto Man Run. I come to you every day, 10 a.m. EST. I usually come to you in the mornings as well, but as you guys know, I'm currently traveling. It's a tough market out there. It's like a black swan event, and there actually in crypto haven't been many black swan events, so to speak. I mean, COVID was one of them. There was another one of them, which was the bottom of the 2017 bull market, or the bottom of the 2019 bear market, whichever way you look at it. But that is exactly what we're undergoing at the moment. And today we're going to be talking about all of those things. So if you're new to our channel, welcome. You should have joined us in the bull market. We had a lot more fun in the bull market. But regardless, we're going to get you through this bear market, because today I'm going to show you guys what you need to do to survive this temporary bear market. And we're also going to talk about why I think that this may be over. And it's not only me. I'm actually going to show you some very, very, very detailed model. If you're new to the channel, welcome. Subscribe to our channel. We do at least 2 streams a day, but we sometimes do more than that, especially now with the markets like this. We often do more than 2 streams a day. The only way you're going to know about our streams is if you subscribe to the channel and if you hit the bell button notification. If you don't hit the bell button notification, you won't know when we're coming on. And if you don't know when we're coming on, you're going to miss a whole lot of the very big calls that we're going to make. Calls are buy calls, sell calls, etc. Also, smash the like button, because that is what shares this video. That is also what enters you into the Banter bags. And if you're not making money on the market, the one hope that we do have is that you will win the Banter bags. And that is when we take $10,000, we invest $10,000 into pre-market allocations, and then we give those allocations back to our community. So you only qualify if you're a subscriber to the channel, number one, and if you follow me on Twitter, and if you follow Sheldon the Sniper on Twitter, and if you follow Crypto Banter on Twitter, and you should follow Fred as well. Fred's going through a tough time. His dad is in ICU with COVID. He has been taken off the ventilator now and gone straight for tracheotomy. And we're really, really, really praying that he pulls through this. I believe in miracles, guys. I believe in miracles. And I want to thank you guys for the support that you've given this man. I mean, the Banter community, the tightest community in the world. We know that you guys are the most loyal community in the world. But the support that you guys have given Fred on Twitter, in DMs, sending me messages is seriously, seriously unparalleled. We're lucky to have you guys. And we'll be here for you right through the bull and the bear market. And I think today is all about whether this is a bear market. It is looking grim out there. And I mean, there's no doubt that we are in bear territory. But is this a prolonged bear market? Because bear markets can be short. They can be 3 months, 6 months, 18 months. The last bear market was the one that caused everyone to have PTSD. So everyone thinks, oh, bear market equals crypto winter. But it's not always like that, guys. A bear market can be a very short bear market. And today we're going to look at why I think that this is a black swan event and why this bear market can be very, very short. Also, I see Freddie is waving me down here. Sheldon's school classes. So we are taking in 20 people a day while we build the crypto school. We are taking in 20 people every Monday to join us for a class, a private class with Sheldon. Those classes they've been fucking phenomenal. They've been so much fun, guys. Have a look at this. Have a look at this little clip from one of Sheldon's classes from yesterday, actually.
What's up? What's up? There's everyone. What's up? Yeah. You got no one to kick your butt. And I think that's what's important about also doing today is for the first time, like creating this community to kick each other's butts.
Don't spend some of it.
Now we've just made $5,000. All of a sudden, Elon tweets and tomorrow the $5,000 is gone. Identify the sort of trader that you want to be. Secondly, you need to now understand that it's going to take you 3 to 6 months to become the sort of trader that you want to be. These little tricks that you get in trading, and you can see how quickly I can draw them to identify where these sort of trend breaks are and what we're looking for in the market for entries, for retests, where to put your stop loss.
Do this on your own, you know, it's all very, you're going to see signals thrown at you.
One day when we're famous, I am going to have a lunch with Elon Musk and we're going to have a chat. If we get the higher high, the volume's backing. We're not getting the higher high. It's the early alarm bell. It's a fake out. And yeah, it's going to then pull back.
I basically look at what am I prepared to lose? What can I afford to lose on that trade? And it is generally about 2 to 3%.
The big one is obviously school fees money, big one. Make your, put a stop loss, plan for your risk every time, when to make that trade free and when to start taking profits. That should be everyone's rules. The chart teaches you everything about trading. No one can teach you about trading properly until you've actually practiced and done it. But the importance of that mental health, seriously, guys. Come on, fuel it. There we go. Trading in the zone. There we go. Love it, buddy. Love it. Guys, how do you get good at something? How do you get good at anything in this industry? Become smarter than the rest. And the only way you do that is by trading and playing and doing everything together. I hope you guys had some fun. I know there's not a lot of time that we can get into everything, but I really
can we take a picture?
That's amazing. So guys, if you want to join that crypto school, every Monday we are having classes with Sheldon. All you need to do, follow my Twitter because that's where I drop the announcement. When I drop the announcement, you reply. Remember, you have to be a subscriber to the channel. You have to follow me on Twitter. You have to follow Sheldon on Twitter. You have to follow Crypto Banter on Twitter. You have to follow Fred's head, producer Fred, on Twitter. And that is how you're going to get selected. And we're going to be doing a lot of those because in this market, if you can't be trading, and I don't think you should be trading right now, I think that you should be out of the markets right now. And I'm going to explain to you why I think you should be out of the markets right now. At least we should use this time to learn. So let's go. Smash the like button, smash the subscribe button. Let's get the show on the road. Let's talk about the FUD. Then let's talk about the model that tells us that we're out of the FUD. Then I'm going to bring on a friend of mine. His name is Mike McGlone. He's actually from Bloomberg. I see him here. You know how you know he's from Bloomberg? I'll tell you how you know he's from Bloomberg. Because people from Bloomberg wear ties. You see, that's Mike and he's wearing a tie. That's how you know that Mike is from Bloomberg. You see, Mike, we're going to bring you straight onto the show. And then I want to also talk about this. Everybody is panicking or talking about this death cross. You see this like death cross when the moving averages cross. And people say that when the death cross happens, when the moving averages cross, then it's like the end of the world and we can all pack up and it's a bear market and we're actually all going to go home. But my friend Cheds says that is absolute garbage, right?
I think so. I think there's a lot of things to think about. It's all context. I'm really looking forward to your show and thanks for having me, man. Appreciate it.
Cheds, smash the like button, smash the subscribe button, because then you can also go to Sheldon Sniper School. I mean, that's the only way.
That's the way to do it, man.
Awesome. All right, so let's get into the FUD. The FUD. What is the FUD of the day? The FUD of the day, I mean, it's not really FUD. The FUD is that some orange man, big orange old man, who knows nothing about nothing, but claims to know everything about everything, came out and made some statements. And I want you guys to hear the statement. So, Freddie, I know you're there. Play the video with the mic drop.
And even former President Trump has spent the last 3 days blasting Bitcoin. Today on Stuart Varney, number 45, said this.
The currency of this world should be the dollar. And I don't think we should have all of the Bitcoins of the world out there. I think they should regulate them very, very high. Bitcoin, it just seems like a scam. I don't like it because it's another currency competing against the dollar. Essentially, it's a currency competing against the dollar. I want the dollar to be the currency of the world.
Mr. President, with all due respect, the dollar is a scam. It's an overregulated fiat currency pumped out by a central bank that has nothing but IOUs to back it up. Bitcoin's creation code required only 21 million Bitcoins ever be produced. As of February of this year, 18,638 of those, 38,000 and some of those sneaky digital bastards have been mined, leaving 2.362 million out there in the ether waiting for my hot dog fingers to theoretically grasp them. Bitcoin and other cryptocurrencies can't be tracked. They are encrypted. And this drives the DC gummers out of their silver minds. President Trump wants it to yield to the dollar. President Biden likes ice cream. And Janet Yellen wants to regulate the living spit out of it so IRS agents can sift through your Coinbase account or other wallets and steal and manipulate your hard-earned money to pay for Bernie Sanders' nocturnal commissions. I cleaned that up. That's why people are drawn to crypto. Taxation is theft, and they've been pilfered and buggered into exasperation. Plus, with
So, I mean, I guess President Trump actually admitted that Bitcoin is competition to the dollar. And he also said that if he was in power, or he thinks that it should be heavily regulated. Well, he's not in power anymore, and I don't think it's going to be heavily regulated. If you listen to what he said, I also think that he doesn't really understand what Bitcoin is. I don't think he ever really understood what Bitcoin was. And I think he's seen it now as this growing asset class. Now, you've seen how when he was in power, the Bitcoin market cap was around $500 billion at its peak. And then now, today, we're talking about Bitcoin going up to over $1 trillion and crypto going to 1.5 or 1.8 or 2 trillion or $2.5 trillion. So, I mean, the one big thing here is that he said it is competition for the dollar, and he thinks that everybody should go into the dollar. Now, we all know that the fundamentals of the dollar are absolutely broken. She said it, everybody knows it. And I guess that what's going on here is that he is realizing, and many other politicians are realizing, that Bitcoin is actually really starting to threaten currencies. We've spoken about this a hell of a lot. I don't want to go into it too much more, but it's not real FUD. I mean, we do know that some of Biden's advisors actually hold crypto. I actually want to show you this, which I found on the web, and it says, let's have a look at it. It says, Department of Justice. Oh no, this is the wrong one. But there is one where, here we go. Tim Wu, who is a White House advisor to President Biden, holds over $1 million in Bitcoin, and he actually also owns Filecoin. So I think they're not going to stop it. I think Trump's comments actually mean nothing in the big scheme of things. I also think that he's a little bit irrelevant because he's not in power anymore and he's not going to regulate it. And I just think he was caught off guard with that question. And everybody is taking that question out of context. And that was the first bit of FUD that we saw yesterday. All right, moving on. Let's get on to the next bit of FUD that we saw yesterday. The next bit of FUD that we saw yesterday was this thing that the FBI, listen to this, the FBI seized some of the Bitcoin in the ransomware attack against the Russian pipeline hackers. Okay, now, the big FUD around that was, how could the FBI actually seize the Bitcoin? In fact, there were probably two FUDs. The one FUD is that these ransomware attacks are all happening in Bitcoin, and that the government doesn't like these ransomware attacks at all. In fact, they're talking about making them, classifying them as terrorist type criminal activities, which is huge. But they're not going to ban Bitcoin because of it. They're not going to say, oh, because people do ransomware attacks, we're going to ban Bitcoin or we're going to ban cash. The FUD, and it is absolutely garbage FUD, is this. The FUD is that in the reports, and I'm going to read this to you, it says, the federal government says it seized by court order 2.3 million of the ransom paid by Colonial Pipeline. The FBI had the password to the hacker's Bitcoin account. Today, we turned the tables on the dark side, says Deputy General Lisa Monaco. Now, and there's a copy of the order. Clarification. While Bitcoin isn't stored on a server, the private keys to unlock the Bitcoin may have been. In any event, an FBI official just told reporters that it doesn't matter where the Bitcoin wallet is, the FBI can still get access. They won't say how. That's the FUD. That's why markets are panicking. Markets aren't panicking because the FBI seized the Bitcoin. Markets aren't panicking because there was a ransomware attack. Ransomware attacks have been happening forever. Markets are panicking because of this garbage, and I'm telling you, it is garbage. It is mathematically impossible that the FBI can get access to any Bitcoin wallet. The only wallet that the FBI can get access to is a centralized wallet on an exchange, or if your wallet is stored on a server and you store your keys on a server, which is what seems to have happened in this Russian pipeline hack. The FBI just got a court order. Here is the court order right here. The FBI got a court order and they seized the server and they got the information off the server, and that is how they accessed the Bitcoin. There is no way, unless the FBI has quantum computers that they're not telling us about and that haven't actually been invented yet and that aren't actually working yet, that the FBI can get hold of anybody's Bitcoin if you store your private keys in a place where the FBI can't reach them. I mean, if the FBI raids your house and you store your private keys on a post-it note under your cushion, then obviously they're going to get your private keys. But otherwise, there's no way that the FBI can hack a Bitcoin wallet. That is absolute garbage. So all in all, if I look at the FUD, if I look at what's causing this correction, it's garbage, FUD, panic, and bad sentiment. And the problem is that the bad sentiment is compounding and compounding and compounding and compounding. Every day, people are just listening to the negative news. They're forgetting all the good news. They're forgetting that a country is making Bitcoin legal tender. And straight after that, many South American leaders, a whole lot of them, I think there were like 10 of them, all put on laser eyes. What they are realizing is that since their currencies are so broken, and this goes for many, many countries in the world, in Africa, in South America, in Central America, in the East, they're realizing that emerging markets can't compete because their currencies are so broken, and that Bitcoin may be the answer to this, to make them more competitive. But no one's looking at that good news. It's being drowned by garbage FUD that is not actually even true. The other bit of good news is that Bitcoin is now firmly an institutional asset. I mean, I got this interview with Mark Lashley, who's a massive fund manager, traditional Wall Street guy, always been an early believer in Bitcoin. Listen to what he says.
Several years ago, you predicted that Bitcoin would go to 40,000. Bitcoin went to 40,000. Now it's back below 40,000. What are your latest thoughts?
Oh, you know, when I did that, I just thought you were going to have, once a market is created, it's there. That to me was the reason why I thought it was interesting on Bitcoin. And I thought that as soon as you had institutional investors coming in, the price would move up. I think today, I honestly don't know where it's going to go, but you've got that market, it's there. I could make you an argument it could go to 100,000. I can make you an argument it could go to sort of 20,000. I think the probability, as more and more people keep using Bitcoin, it's going to keep moving up. But yeah, it's happened a little bit quicker than I thought it would. I should have bought a lot more. That was my mistake.
I should have bought a lot more. That's what everybody's going to say after this FUD. I've seen this. I've been around since 2015. I saw this in 2015, 2017. Guys, when this thing recovers, and it's going to recover because the fundamentals are in place, and I'm going to show you a model in a few minutes that shows you why we are at the bottom of this bear market cycle. I am going to show you, you're going to go back and you're going to say, I should have bought more when this happened. Why did I lose conviction? The market is designed to demotivate you, to get you to sell. We're at the bottom now. You can see it because most people are demotivated. Altcoins have come to the small cap altcoins have come to a halt. People are demotivated about the concept and the topic of Bitcoin. This is the time when you guys should be buying. This is the time when you guys should be accumulating good quality coins. And we're going to talk about that just after. What I want to do now is, but I'm only going to do it when you guys smash the like button and smash the subscribe button. Because what I see here is I see that there are 11,000 of you watching, and there's 3,700 likes, which means that 7,000 of you are not loving the content. Smash the like button. Let's get this. Come on, guys. Smash, smash, smash. I'm watching the like button. The likes go up. Let's do it. And then I'm going to bring a friend of mine. I see people are panicking. Don't panic, guys. We're going to talk to you guys about why you shouldn't panic. Smash that like. Go, go, go. Get those likes up. And then I'm going to show you guys why you shouldn't be panicking. Ludacris, you are crazy. My first bear market. I love it. Well, we've all had bear markets. I've had 10 bear markets, guys. Demola, you are picked for the class. You can be on the class. Demola is in Sheldon's class for Monday. Only if you're subscribed to the channel, only if you smash the like. Let's go, 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 go. Smash that like button. Let's get these views up. Let's get these views up. Let's get more people watching us. Ali M, I'm scared. Don't be scared, Ali M. Damer, you're in for the class. Listen to Uncle Run. Listen to Uncle Run. All right, I'm going to bring in Mike. Mike is from Bloomberg. Mike, how are you, my friend? Mike, can you hear me?
I wore my tie just today.
I see. I mean, yeah, we can hear you. It seems like you got quite a bad internet connection. Is there Just try that again, Mike. Mike, I wonder if you can log off and log on and see if we can log off and log on.
I can get out and get back in. I should have a good one because I'm at work.
Let's do that. Let's log out and get back in. All right, let's move on with the show. Guys, remember Cheds? Cheds wrote the book Trading Wisdom. We introduced the book Trading Wisdom to you guys on the show. And then we told you guys to buy it. And I said to you guys, look, buy Cheds' book. And if you don't think that it's the best book that you've ever read, then tell me and I'll actually pay you what you bought for the book. Cheds, how many crypto banter community people bought the book?
Well, first of all, I want to say thank you. It's a wonderful opportunity to talk to your community. Folks, hit that subscribe, hit that like button. Rand does a great job. And your community has been amazing. I've met so many new people. We've sold thousands upon thousands of copies. You've changed my life, and hopefully the book is changing their lives. And so it's just a wonderful experience. It's wonderful to be back. And you are the man. So thank you, buddy.
You are the man, my brother. Cheds, lots of FUD going on at the moment about this death cross. Imminent death cross. What is this death cross, and should we be paying attention to it?
Well, let's jump over to my screen. I have a couple things to share, and we'll try to make this educational. So when you think about a death cross, that is generally referred to as a 50 crossing the 200. When you think about moving averages, you have two main types that people use: a simple moving average and an exponential moving average. A simple moving average just means every single one of those periods gets equal weighting. So a 200 MA means each of those 200 has the same weighting. An exponential moving average, which is usually used for more short-term situations, gives more weight to the most recent candle. So that's just, let's get that out of the way, exponential versus simple. So the death cross is the 50 versus the 200. When you're going to use a moving average cross, there are several important things to keep in mind. First of all, you want to look at the proximity to the price. So when the moving average crosses and the price is right there, I'll give you an example recently in Bitcoin's price history. And just to quickly answer your question, no, don't worry about the death cross. And we'll get into that. So when you have a pretty close proximity to the price, you had a quote unquote death cross here, right? The price actually bounced from 8K to 10K, but then it eventually found its way down to 4 or 5K. You get a decent amount of follow through. So when you have any kind of moving average cross, you want the price to be near where the moving averages are crossing. That way the move isn't baked in. So let's just kind of set that aside, right? Secondly, you need a market, you need a trending market. Like a moving average cross in a sideways market is basically useless because you can't reverse a sideways market. You're going sideways, right? So with Bitcoin, all Bitcoin really has to do, let's say we break down a little bit further, come up and just go sideways for a while, I would pretty much kill the concept of the death cross because your MA50 would start to flatten out, MA200 would start to flatten out. So you need a trending market to reverse. That's what a moving average cross will do. All right. So you want to look at proximity to price, and you need to have a market to a trend to reverse. The price is so far away from this theoretical cross. Let's say this bear pennant, hit its measured move, roughly taking the height of the triangle and kind of extending that down from a theoretical breakdown point, 23K. Let's say that happened. I'm not saying it's going to, because we could very easily rally here, bounce up and break up. That's fine. But if we did break down, you'd get that moving average cross like right here at 40K when the price is at 23K. It's a worthless signal. It's a lagging signal. As new traders, and I went through this in my early career, we want simple solutions, Rand, right? We want simple things. We want, is it a bear market? Is it a bull market? Death cross, golden cross. We want these exciting terms to explain things that are complicated. I suggest you ignore that. I suggest you focus on what the price is doing now in relation to more shorter term moving averages. We had talked about how an early warning sign for Bitcoin was that initial first close below the 50 period moving average. And you had seen during kind of the acceleration of this price move for a long time, the price has held that 50, 50, 50, that orange line. So that was an early warning sign. That's an acceptable use of a moving average. Shorter term crosses are fine, but these longer term crosses are useless, right? You go back to this recent death cross and okay, we death crossed here, but then we had this massive bounce. So and this is a sideways market as well. So you didn't really get much of a play off that signal. So, it's exciting. It gets YouTube clicks. It's one of those things people want. Like I said, they want easy solutions. They want easy answers. look at the proximity to price. Unless the price is right where it's crossing, it's probably a weak signal. And those are my thoughts on that, Rand.
Cheds, when you look at the chart, is there anything bullish in this chart? I mean, I know you don't look at. So what's bullish?
Well, we have hidden bullish divergence with the RSI, which is a continuation divergence. If you take the lower lows in the RSI, more or less, you take the series of lower lows in the RSI, and you have the higher lows in the price. This is called a continuation divergence. And why that's bullish, what that means is, while the RSI is going all the way down to that oversold around 30, price has retained most of the gains. So you have the price putting in higher lows while the RSI goes lower. That's a continuation divergence. That's probably the best case for bulls right now, is that continuation divergence. You have several things going against bulls, of course. The fact that we're trading below that key support, 42, 43K, below the MA200. You know, any bounce that happens here, let's say we bounce here, you got to be suspicious until we get back up above that 43K level. That's kind of the key momentum pivot level at this point. But you do have hidden bullish divergence. And the way to use that is if we get another leg down, if we do break down, that should give you a lot of confidence to maybe enter a kind of dollar cost in or kind of scale into a position, because we're going to be talking about RSI sub 30 with the price revisiting key support levels, 20 to 23K, et cetera. So that is one thing going for the bulls, the hidden divergence.
Cheds, is it better to buy something on the way down, like now, or is it better to wait for the reversal? Because, I mean, one thing is buy the dip, buy the dip. My theory is, I mean, you could buy the dip, or you could wait for the bottom and you could miss out and just wait for it to bounce. I mean, would you be buying now or waiting for a reversal of the trend?
So you've come a long way in your technical analysis. It's actually better to wait for the confirmation, to wait for the bottom to reverse. I did just put out video 2 or lesson 2 of my 50-part video series on trading wisdom. The title of that is "What's the Rush?"
Whoa, stop.
Yo,
where the hell can I get that?
YouTube under Ched's Trading. I'm taking this book. I'm doing a free version every 3 weeks. I'm putting out a video in full video format. I explain the whole thing, and people love it. I love it. It's fun for me. And I just did this lesson.
On.
Yeah,
Freddie. I've done it. I know what you're going to ask me, Rand. It's already in the description. Everybody can access it.
Yeah, I love you guys. I love that.
Okay.
All righty. So.
Yeah. So look, you don't want to rush in. It's like, what's the rush? You want to act with the confidence of the trend, right? The technical analyst should not really anticipate the reversal, but should rather wait for the price action to show you. For example, a diagonal break, a horizontal break, a retest of support. Those are the type of things you want to look for to initiate a trade thesis or a trade idea, something upon which you can establish a stop loss and define your risk.
Chid, do me a favor. I want to bring in from Bloomberg. I want you to stay in the waiting room, because I'm then going to show you guys why I think that we've hit the bottom. And it's not only me. I'm actually going to go look at a mathematical model that says that we've hit the bottom. And then I'm going to show you guys what you need to do to make money in this market. And I want Chid to give me his opinion. So Chid, you'll be back in the waiting room. Mike, hopefully, the man with the tie, hopefully we've got some good internet signal. Mike, welcome back, my friend. How are you?
I'm good. I hope you can hear me okay now.
We can hear you. Mike, you told me on the weekend, I said to you, you're traditionally a charts guy. And every time I always see your charts and I respect your charts. And now all the charts are negative. But yet when I saw you on the weekend, you said to me, we're in a bull market. We're still in a bull market. Do you still think that we are in a bull market?
I do, and I wore my tie just for you today, Ron. I know I have a pretty color that you'd appreciate, the Tiffany blue. I'm both. I'm everything. I've been accused of being just a chartist, but I just view that as a good, anything I can to analyze the market. I view this as a dip in a bull market, and one thing about making bottoms and making peaks, they have to usually involve a pretty extreme amount of human emotions. I view Bitcoin as pretty good support around 30,000. As you mentioned, there's a lot of FUD, and that's how you make bottoms. Like today, I don't think this is a really good reason to be making the market to be collapsing, but it's within the recent range, and we've been dropping since the peak in last month, and I see it's getting pretty bit oversold into deep good support levels here, and I think lower prices are going to bring out responsive buyers.
Okay, now you tweeted something, and I actually want to see if I can share that tweet with the audience today. You tweeted this today. It says Woodstock, like Bitcoin 2021, Miami backs mainstream adoption view. The 3 to 5 June Bitcoin 21 conference further validated our view that Bitcoin has transitioned to a global digital reserve asset and away from being a speculative crypto. What did you mean by that?
Yes, I think what we're seeing right now is the speculators getting out. I had a colleague tell me earlier he had friends getting around 50,000, and that's typically what happens. You know, you get people get a little too enthusiastic and near the highs, and you got to stop them out. I think that's what is happening now. We're stopping out a lot of the speculative excesses. The market got, I mean, having Dogecoin going on Saturday Night Live, that was a pretty good sign of the bell ringing. And there's just, you know, there's speculative excesses in the space. But Bitcoin to me is a real deal. It's more like a digital gold, a digital reserve asset. And to me, that's the sense I got out of the conference. I mean, I wear a tie because I'm asked to go on TV once in a while, but there was a lot of professionals I saw there, you know, trust banks, miners, I saw accounting firms, and it looked to me like this is the mainstream asset class, and there's going to be buyers and dips. The question is, where's it bottom? And I think it's pretty near there. So that was my sense from the conference. And the other risk you could say was, okay, was this many people in one place that enthusiastic? Is this sign of a peak? And no, I don't think it's that, because to me it's going mainstream. There's still a key main dangling carrots, which you've mentioned before. We still have to get US ETFs, which I think are a matter of time. And you just look at, I watch track futures. I used to launch a lot of ETFs that track futures, and you look at the futures volume that trade in the CME, and it's now adequate enough for an ETF. And so it's just a matter of time. So I view these type of moves are where you're supposed to separate the weak hands and move things back to the stronger hands.
Why do you not think that this is the top of the bull market and that we're now going into a 3-year or 2-year correction like we were at before? I mean, I know we all want to believe it. And, you know, that's human nature. Human nature is that it takes you time to accept where you're at. It takes you time to accept it. Why do you not think that, hey, you know what, we're in a bear market. It's the end of the bull market. We had a great 5-month bull market or 1-year bull market or whatever you want to call it. And now it's a bear market. Why can't we just admit it?
Well, it could be a beginning of a bear market, but I doubt it from what I've seen fundamentally and technically. Fundamentally, I still see, like I said, there's still this major dangling carrot of ETFs. There's still a major amount of asset management that I still think need to allocate to Bitcoin, partly because it's the most unique example of human nature I've seen in history where you kind of have to, because what you're holding in gold and other assets might become a little bit redundant if you don't add Bitcoin to that mix. So I see it people like Michael Saylor and a lot of the people we saw at the conference point those kind of things out, that it's still very small portion of most asset portfolios. Whoops, sorry about that. So what you just saw there is I had to use my phone because I couldn't use my system at work to speak to you. So my phone just fell off its little pedestal there. But so that's what I see. I think it's early days. And then the indications I had last year were volatility on Bitcoin dropped to the lowest ever versus Bitcoin versus gold versus S&P 500 stock market versus crude oil. And typically those are indications of big moves forward. In addition, you know, it works in 4-year cycles. This is the first year after a halving, and most notably for halvings, you have pretty significant move. And what's really happened with this one is it's coming to the time Bitcoin's joining the mainstream. And that was a key takeaway from the 2021 conference. Bitcoin's in the mainstream, and most asset managers on the planet, I think, are more likely to be buying dips, and you have speculators just kind of knocking things around.
Mike, thank you so much, my friend. It's been a great pleasure having you on. The sound quality isn't great, so I'm going to move on. But always good to see you, and we'll get you definitely back on as soon as there's some more news. All right, that's Mike, and bad sound from Mike. Okay, now let's get into the meat and potatoes of the show. But I'm not doing it unless we have 10,000 likes. So 10,000 likes, I'm going to show you. Wow, we've only got 5,800. 10,000 likes, I'm going to show you why I think we are at the bottom. And it's not only me. It is a very well-known model that's going to show you guys. I'm looking at the model right here. But 10,000 likes, 10,000 likes. Otherwise, we just wait. Grab a drink. Freddie, we're waiting for 10,000 likes.
How far are we?
I have no idea. I can't see.
Sir.
How many likes have we got? There we go.
We're about
7,500. Go, guys. It is. It's time
Yeah.
for the meat and potatoes, guys. I'm going to show you guys a model. I'm going to show you guys a model. Let's say, and it's an accurate model. In fact, the model's never ever been wrong before. And this model now shows that not only is Bitcoin actually in a black swan event mode. Now, you know what a black swan event? A black swan event is a massive, massive, massive event that no one could predict. That is catastrophic. Now, I'm going to show you today why right now what Bitcoin is going through is the equivalent of a COVID, is the equivalent of an earthquake, is the equivalent of a black swan event. I'm going to show you that. And then I'm going to show you why it is the bottom, because usually what happens after black swan events is that that it's the bottom and then things start to recover. Now, initially today when I woke up, I was going to make a show to talk to you guys about how to survive the bear market, how to survive. You know, if you're feeling crypto depressed, then this is what you should be doing. But then when I saw this model, I thought, hold on a second, this we can do tomorrow. What we need to do today is we need to talk about what is actually this hope, because when I read it, it was so profound. It just, something clicked in my brain and said, okay, hold on, the bottom is near. Let's not talk about being crypto depressed. Let's actually talk about the bottom. And so I think we're at the bottom. And I think that with another 2,500 likes, I'm going to show you guys why, 2,200 likes, 2,000 likes. Okay, let's do it. All right, so let's get into it. So the reason why I think that we are now near the bottom, and I wasn't going to say this today, I remind you guys, I wasn't going to say that we were at a bottom today, because I didn't think we were at a bottom today. I thought that we are actually going to go into a longer bear market, not very long, not 3 years, but longer bear market, and that we need to prepare ourselves. And I still want to prepare you guys for that. But I also want to show you guys this model. Now, what is the model? The model is the stock to flow model that everybody talks about. It's a old model. It's used to price scarce assets. And Plan B on Twitter, his handle is $100 trillion USD, has migrated the stock to flow model to crypto. And it is the most accurate model in crypto. If you look at the price is the red part on the chart. And you look at the stock to flow model, you can see that never in the history, now I say this again, never in the entire history of Bitcoin, and I'm going to make this bigger for you guys. I'm going to make it bigger so you can see all the time frames. But if you look at it, never in the history of Bitcoin or crypto, and here's the beginning of Bitcoin, has the model been wrong. Okay, so every time the price stays within the model, but never, ever, ever, ever has the price gone below the model. Though the three times in recent history that this model has touched the bottom are one at the bottom of the bear market in 2019. Then when COVID happened, ever so instantly over here, and then again when you combine all these factors, which is the Elon FUD, the Fed claiming Bitcoin, the China ban, the Trump, etc., etc. When you combine all of those together, that brings you to something of black swan magnitude, okay? It brings you to something that is as big as the COVID shock that the world has. Now, you can see that where the red line is, it's at the bottom range of the model. The model has never, ever, ever broken out of this bottom range. Never. Look, never since the model was created has this model broken out of the range. And we're talking about 13 years. It has been tested. And let me show you what Plan B says about this. He said, a few months ago, people said the stock to flow model was invalidated, broken, because all models are broken to the upside. Now people think the stock to flow is invalidated, broken, and Bitcoin is dead because some Elon banning hacking FUD. In my opinion, it's a normal deviation like the 2019 bottom or COVID, okay? So what he says is that the model can deviate from time to time, but it deviates for very short periods of time, and then it goes back to equilibrium. Now, this same model, the stock to flow model, also predicts a conservative price for Bitcoin at the end of 2021 of about $100,000. So you have this model. For me, when a model has never, ever, ever, ever in the history of the model been deviated from the model, and now it's showing you that we are at the bottom, because where we are now is the equivalent of COVID, of the 2019 bear market correction, and of we're now at that same point. What Plan B also says, and he was asked a question, he says, hello, what is the difference in percentage between the Bitcoin price and the stock to flow model? Could we think that the stock to flow model is no longer suitable? Well, it's a linear regression model, and all parameters and stats are in the paper, so you can decide to verify it for yourself. In my opinion, as the creator of this in the crypto world, regression models can withstand a couple of outliers like it did during COVID or the bottom of the bear in 2019, but not a couple of months. So basically what he's saying is, look, we could be just outside the model, which is where we are today, but it's temporary. And in his opinion, it could happen for a small period of time, but not a couple of months. That means that we could get another week of down, maybe 2 weeks of downtime, maybe 3 weeks of downtime, but we're not going to get a couple of months. If we do, it would be the first time that this model over here, the first time that this model over here in 13 years has been, 10 years has been inaccurate. Now, I don't know, when a model has proven itself after COVID, after the worst bear market in the world, after many government attacks, when a model has proven itself over 13 years or 11 years, then for me, I would say that it is probably something that you want to put your money on. Now, there are a lot of other videos that you can refer to about what a stock to flow model is, and we can get that. But I think you guys have got the gist of it. The stock to flow model is a model that values scarce assets. And how it does this is it takes the number of assets that are out in existence, the 18.6 million Bitcoin, and it takes the rate at which the assets are being mined or the assets are being created, and it compares this to the demand. And in fact, let me play you guys one quick clip. And then after that, I want to tell you guys what you need to do now, because we may be here for a good couple of weeks, but what are we going to do to make sure that we survive this and that we actually make money? So I want you to hear this about the stock to flow model. It comes from the creator being interviewed by Pompliano. Let me find it over here. Here it is.
Why does stock to flow work? Yeah, because it measures scarcity directly, like gold, so you can sort of compare it with gold in stock to flow terms, but also in market cap terms. And the scarcer something is, the more valuable it should be. So that's one thing. That's the point I started with. But another reason it works very well could be the network effects that we talk about a lot within Bitcoin. So there is the network effects of developers, that more and more developers start working on Bitcoin, and more merchants start buying stuff and selling stuff with Bitcoin, and investors, a number of investors keeps increasing, and then there's all sorts of network effects in markets where you have in the beginning you didn't have on ramps and off ramps. Now you have.
So basically, bottom line is stock to flow model has been tested, has been battle tested, and does work. And if it does work, then we should be buying this. Okay, now let's get to the most important part of the whole show. What do we need to do now? Because this buy the dip mentality may make you broke. The biggest thing that you need to be doing right now is making sure that you can survive long enough, no matter how long this bear market trades. What I mean by survive, the first thing it means, buy quality. Make sure that you buy tokens that are going to survive or can survive a bear market. Things that are going to be here if the bear market lasts for a year, for 2 years, for 3 years, and it won't. But if it does, make sure that your tokens can survive, because that way, regardless of whether the tokens go down in value or up in value, if they're going to be here, it just becomes a time game. You need to make sure that you keep ammo to survive the bear market, to make sure that you're here on the other side. And if you do that, then when you get to the other side, then you will make money. No leverage trading. If you leverage trade now and you get whacked, you're out of the game. I wouldn't be trading in and out. I wouldn't be trading in and out all the time, because if you do, you may take $1,000, you may have 800 after loss, you may have 600, you may have one. No, just hold. Get good quality stuff and hold it. If the market goes down, you know it's going to come back at some point. If the market goes up, then at least you catch some of the upside. But if you're trading in and out and you make mistakes, you're out of the game. You're out. You're not going to be here. You're not going to be able to play another round unless you mortgage a house or raise more money. And we don't want that. So my biggest message to you guys is make sure that you stay in the game. Make sure that you are positioned in such a way that if this bear market lasts, you stay in the game. Because if you're in the game, you can score some goals, you can recover. But if you're not in the game, if you get wiped out, then I don't know how to get you back. What do you think, Ched?
I think you're talking about risk management, which is really important. You're talking about dollar cost averaging, not firing all your bullets at once. I think that's really smart. I think you want to stay adaptive and flexible, because every day we get new information. And to your earlier point about the stock to flow model, I think that's really interesting. But it's not my style. Anything like that takes me away from the price. It takes me away from the chart. I like to let the price guide me.
You're a degen chartist. You're a degen chartist.
I'm a degen. Yes, sure. You nailed it. Put that under my description. But those things are nice. Those are narratives. But the price is the truth. It's a historical study of what has happened. It gives you clues about a strength of a trend and maybe where we're heading. I'm not so much into those things, the stock to flow and the death cross and all these narrative things. I think they're fine in the mosaic, perhaps. I like to focus on the chart, look at support and resistance, look at volume, and kind of go from there. If we're in a bear market, what you want to be doing is looking for, opportunities, if you're a bull, to buy those really oversold dips. But you want to define your risk. Every trade you're taking in that more dangerous environment needs to have a tighter stop loss, and you need to manage your position, right? I've talked about this on your show before. When you enter a trade and that trade fails, don't just hold on to it because it failed. Oh, well, I guess I married my bag now. Don't do that, So every trade should be thought out. You're respecting your money. You're being methodical. You're managing your risk. And that's really how you survive anything, because step one is to survive. You have to survive your mistakes, survive a bear market. And then over the years, you'll become a more seasoned trader, grind out those small wins, and then you can buy that vacation house or a small boat, whatever you're looking for.
Amazing. Ched's always good to see you, my brother. I will see you again soon. Thank you for all the value that you add to our community. Much love for you, part of the family. Guys, if you haven't bought Ched's book, buy Ched's book. If you don't like the book, I will pay you the money that you bought for the book. Alrighty, guys. I'm going to leave it at that. I will see you again tomorrow. I want to talk tomorrow. I want to talk about Kusama and Polkadot. I didn't want to talk about alts right now because I don't want you guys aping into alts. But Kusama is launching its parachains auctions. Parachains auctions. It's like now. It's happening. Hold on a second. Let's have a look here. It's now. The first parachain will be announced on the 22nd of June. So Kusama parachains are launching. Super, super exciting. But we will talk about that tomorrow. For now, we need the market to recover. We need Fred's dad to recover. And I need to go to the beach. So I will see you again. Same time tomorrow. It's 10 a.m. EST. I may even join for my brother Sheldon show. Until then, guys, if you are trading, trade well.
Crypto Banter is a social podcast for entertainment purposes only. All opinions expressed by the hosts, guests, and callers should not be construed as financial advice. Views expressed by guests and hosts do not reflect the views of the station. Listeners are encouraged to do their